The price action justifies the narrative. When they do, my experience has been that leadership switches from gold to silver. We may be experiencing that right now. I notice that among the silver juniors, this increase in the silver price has led to an absolutely massive.
Silver's never gotten over 50 and really stayed there, and it hasn't in 50 years. So I think it could be a crossing the Rubicon moment, which means once it's accomplished, and I believe it will be, we've established something that hasn't occurred for 50 years in a precious metal known as silver.
The overnight price movements have become particularly noteworthy, with traders in Western markets often waking to find silver has gained significant value during Asian trading hours, a pattern that highlights the global nature of this rally. This inflation-adjusted view reveals that despite the impressive nominal gains, current silver valuations between $45 to $50 remain approximately 50% below the inflation-adjusted 2011 peak. This suggests substantial upside potential remains when viewing the market through a historical lens adjusted for purchasing power. RickRule identifies a turning point in the precious metals cycle, showing silver is now stepping ahead of gold. This is a classic sign that mainstream, non-mining investors are moving into the sector. Historically, when this happens, silver doesn't just follow gold's lead, it starts to outperform it dramatically. However, Rick issues a serious warning about the euphoria as the smaller silver juniors are seizing this moment to issue massive amounts of new shares. Investors are now caught in a double bind, as they must contend with both the dollar's monetary inflation and the dilution of their shares, which is eroding their ownership. The rally is real, but the fine print requires vigilance. In his outlook, Rick predicts silver will move much higher, but remains disciplined, taking partial profits as prices rise. Reflecting on past bull markets, he recalls how quality silver stocks have surged exponentially, expecting a similar pattern in the coming years as investor interest deepens. Highlighting today's unreal interest rates, RickRule says gold will continue to rise as inflation remains near 8% and fiscal discipline remains absent. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Now let's explore the latest insights from RickRule and DavidMorgan's recent interview.
Looking at the thing slavishly in terms of the price per share today and the price per share 5 years ago ignores the fact that there's twice as many shares out. It also ignores the fact that thus far he's broke his pick at Jarrett Canyon. And you need to, in your own mind, write Jarrett Canyon off doing a valuation of First Majestic, or else you have to assume that he's going to be able to turn it around. It's important that you do that. I believe that the last 3 weeks are an indication that leadership in a bull market is switching from gold to silver. That has happened in my career when the generalist investors become attracted to the gold bull market. It usually takes the generalist investors 2 or 3 years into a bull market to come into the space. The price action justifies the narrative. When they do, my experience has been that leadership switches from gold to silver. We may be experiencing that right now. I notice that among the silver juniors, this increase in the silver price has led to an absolutely massive dilution campaign. The silver juniors that were starved for capital 3 or 4 years ago the floodgates are opening, and these guys are issuing lots and lots and lots of paper. Daryl, I always make fun of the government for counterfeiting, issuing phony paper. The private sector is always more efficient than the public sector. And the Canadian dealer network can issue more phony baloney share certificates than the government can currency. People who are concerned about inflation need to be concerned about the inflation in the share counts of their juniors. I personally own much more physical gold than silver, not because I think that silver won't outperform gold. I do believe that silver will outperform gold, but I save in gold. I don't speculate in gold. I speculate in silver. So for me personally, I stacked way, way, way more gold than I have silver. I speculate in silver stocks as opposed to speculate in silver. That notwithstanding, I'm greedy like everybody else, so I do own some physical silver. I think it really depends on your personality. Let's just get it out of the way. I'm old, fat, rich, right? I don't need to do this for a triple or quadruple. I need to do it to maintain my purchasing power, and I need to do it for amusement. So for me, I have a large amount of physical gold, a lot. Some physical silver, but my speculative positions are in the silver stocks. My experience in the last 3 bull markets in my life suggests to me that when the generalist investor really believes in the precious metals narrative, that the amount of money that flows into the high quality silver stocks exceeds the market capitalization of those stocks. They really, truly explode. And I'll give you, Daryl, if you will allow me, some rather graphic examples. In the decade of the 1970s, when I came into the business, a little tiny penny dreadful called Coeur d'Alene Mines on the Spokane Stock Exchange entered the decade in 1970 at 10 cents. It exited the decade on the New York Stock Exchange at $65. Now, sadly, I was too inexperienced and too poor, frankly, to participate in that. But I was ready next time. The silver bull market that we enjoyed in the early 1990s, and it was a ripper, saw Pan American and Silver Standard, both of which I financed, grow from 50 cents and 72 cents respectively to over $40. And they did it in 6 years. That's an example of what can happen to high quality, repeat high quality silver stocks in a silver bull market. There are probably 200 silver companies worldwide that purport to be legitimately in the silver business, and there's probably 20 worth considering. An assemblage of those 20, I expect in the next 3, 4, 5 years will do extremely well. As I say, I repeat myself, that notwithstanding, the fact is that I can, in the more speculative end of that market, sell a quarter of my position and keep the rest for free is such that despite the fact that I think that the market is going up even in the near term, I'm de-risking. If we had real interest rates, that is to say, a real yield in excess of the rate of inflation. I suspect that the rate of inflation right now is 7.5 or 8%. So if inflation came down to 2% or 3%, not CPI inflation, I mean real inflation, or if we had a balanced budget, or if we had a political resolution to entitlements, $120 trillion in net present value of entitlement liabilities. I think we resolve all of those the way we did it in the decade of the 70s. We have a real reckoning 10 years from now. So I believe the gold price goes higher, but I don't care. In terms of my speculative position, we've talked before in prior interviews, Daryl, about the fact that money's made in speculation by answering unanswered questions, by greater certainty around an asset. And I say that because I looked at some stocks that I thought would achieve price targets with a yes answer 18 months from now, that have achieved those price targets without a yes answer today. If somebody pays me based on an outcome that hasn't occurred yet, and I don't have to take the outcome risk, I want to take the money. We talked about, we opened this up talking about wealth. What you have in the speculative stocks is latent wealth. When you take the money off the table and steward it, you have real wealth. Daryl, when you talk about real wealth, and I know I'm getting away from the question, but the wealth that you're building is knowledge and reputation, intangible wealth. Intangible wealth gives you the ability to earn real wealth over time, and intangible wealth can't be stolen. You can forget it and lose it. It can't be taxed either, the proceeds of it. What you're doing right now is building your real wealth. You're building the Daryl Thomas brand, you're building your reputation, and you're building your knowledge. That's wealth. A penny stock that goes from 30 cents to 42 cents, unless you sell to 42 cents, that's not wealth.
Regarding silver's performance, DavidMorgan explains that while gold began its bull run in 2000, silver lagged behind until 2003, when it outperformed for years. He believes the metal is now nearing its Rubicon moment, where a breakout above $50 could reset decades of market psychology. The current macroeconomic landscape presents fertile ground for the performance of precious metals. Market expectations increasingly favor Federal Reserve rate cuts as economic data points to potential slowdown concerns. This shift toward more accommodative monetary policy globally reduces the opportunity cost of holding non-yielding assets, such as silver. Morgan warns of a possible October shakeout driven by overvalued markets and political risks. He argues that holding at this price range would strengthen silver's long-term base. It will boost institutional demand, and algorithmic trading could drive prices sharply higher. Let's jump into the interview.
If we go back to the beginning of this bull market, it happened in the year 2000 for gold. I forget what month. I haven't looked it up, but it was in the year 2000. Silver actually did not break out until it got above the 555 level, which was September of 2003. So let's just say that gold broke out in September 2000. I think it was early in the year, but so September 2000, so 3 years later, silver actually breaks out. That's a pretty big lag. And then once silver broke out for that 11-year bull market that you and I both enjoyed, basically gold was year over year higher every year for 11 years. Silver outperformed gold in some of those years. There were years it was off, but it was a huge bull market for everybody. And then it got real frothy near the end. It started to go parabolic. And as you know, I called the top. It's interesting. I have to digress. There was a podcast, a friend of mine, two of them, and he was talking about how hard it is to call top. And it is. I'll call it luck, but I don't get my feelings hurt too much. The point is, we have a lot of things to go forward. So the second part of your question is like, is it different this time? Yes and no. Yes, it's different because the breakdown throughout the financial system is occurring worldwide. More and more people are recognizing it, and we're seeing sector rotation, which means the big money is moving into gold. It has been for years, as I've said to you and many others. The run to gold began when the central banks started to increase their allocations to gold. Silver's caught it. It's starting to do what it did in September 2003. It's made a breakout in this, what I think, last leg up. And this last leg up should be the most effective in capital appreciation, and duration-wise probably won't last that long relative to the totality of the bull market. So if you started from 2000 till now, it's 24 years long. If you started from whatever, the bottom, which I remember the month and year, it's still been many years since we hit the, 1,050 or whatever it was for gold. We're now up at almost 4,000. So I think I over-answered that, Charlotte, but I am still bullish, but all bull markets function is to shake off as many participants as it can. And we haven't seen one of those big shake-offs yet. I do expect we could have one in October. One of the best clues to say that you're at a top is not only a parabolic move, but silver starting to outperform. It really isn't. And we know that from the gold-silver ratio. A lot of people, make light of it, but it's a useful tool if you know what to use it. And what you use it for is to see if silver is outpacing gold or not. We're still in the 80s for the gold-silver ratio, which is historically high. And until we get to 70, I'm not going to be particularly happy. And often today's gold price, a 71 ratio would be like $55 gold, $55 silver. And that would be over that 50 mark, which we're all hesitant about. And I'm writing about that in this month's newsletter. People see the 50 mark differently. All the technical types talk about, a double cup and handle, or a cup and handle that's, 50 years in the making. It's a very significant number psychologically. Silver's never gotten over 50 and really stayed there, and it hasn't in 50 years. So I think it could be a crossing the Rubicon moment, which means once it's accomplished, and I believe it will be, we've established something that hasn't occurred for 50 years in a precious metal known as silver. And that will have, I think, some psychological effects to the silver community. And for the algorithms, it will also have an effect because there'll be blue sky. In other words, everyone that's ever held silver nominally is at a profit in inflation-adjusted terms, far from it. For many people that bought it, even in the 30s or whatever, inflation-adjusted, they really haven't made any real significant gains. So I'm not anxious for it to happen. And the last thing is, in the previous moves into the 40s, silver really didn't stay there for very long. And now we are seeing like a monthly close in the 40s. And I'm actually happy to see us trade between, let's say we just consolidate here between, make up a couple numbers, 47 and 44. And we stay there till the end of the year. A lot of people say, see, silver can't go any higher. I would say, no, we're building another base to go higher with more authority than if we just bounced up there in the next couple of weeks. What scares me, being a futures trader in my past, is that you get a move and it just keeps going up and up, and then you don't have any kind of a base or any kind of support. So far, silver's making enough support as well as gold that these are strong markets that continue. And last thing is, somewhere there'll be a shake-off. I believe it will be short-lived, but significant enough to scare out new people or weak hands or people that are unsure of the commitment to, the silver and gold markets. So you'll see both the tails and you'll see the middle as well. How you stay in the golden mean, as Aristotle called it, but you'll see people say, now we've reached 50, we're going to 1,000 or we're going to 200. Or, you'll see that extreme, the tail end of the bell curve. And then you'll see people like, it's only a matter of time. It's only been 2 weeks and silver's going to crash down below 50 because it can't maintain that high level. It never has and it never will. this is an anomaly. So you see those two tail ends of the curve. So it's 50, it's an anomaly, it's coming right down, and those is going to the moon. So where is it in between? And that's, kind of my job to try to help as many people as I can that, what is a likely scenario, what is the top price, and no one can pick that ahead of time. But I do think with that, the psychology will be favorable to silver. So what right now is taking place is, the analogy of Lucy and Charlie in the football. He comes to kick football and she pulls it away from him. And she does it again and again and again. And silver investors have seen that so many times that once silver got above 35, 38, they said, the football's coming away, I'm getting out, selling at 40. Oh, 44, I'm happy to take that. 47, even better. So a lot of people are actually selling back into the silver market. And in my view, they should hold on, but they can do whatever they feel is best. Some are just selling partial because they need the cash or whatever. But once we get to that new level, what's the middle between it can't get above 50 and it's going to the moon? Well, it's going halfway. So there'll be a lot less resistance. You'll see algorithms come in and start trading silver. And you'll probably see institutions come in because they know that there's it's a small market and they can move the market with a buy order if it's significant enough, and just think that someone else will come in with as large or larger buy order and they can trade out of it. In other words, buy it at 55 and sell it at 62 and watch it go to 70 or whatever. So it's going to be tough.
While gold nears the $4,000 mark as a traditional safe haven asset, silver is stepping into the spotlight, benefiting from both its monetary role and strong industrial demand, particularly from the booming solar energy sector. A weakening dollar, persistent geopolitical uncertainty, and a structural supply deficit are all contributing to this surge in precious metals. However, some analysts caution that overbought conditions could trigger a short-term correction, even as fundamental drivers support a long-term bullish outlook for both metals. Will silver's long-awaited move beyond $50 mark the beginning of a new monetary era, or just the calm before another storm? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the following video.